G'day team and welcome to the second instalment of the 2024 Term 4 exam for BEA in the accounting section. The accounting section in this paper, I've said it in the previous video, but was pretty poorly done across the board, especially in the balance sheet. And there's a couple of reasons why. One reason why is there is no profit given to you, so you do have to work that out. Using the notes section also became an issue for some students, like is instructed in the question. So I'm going to show you how to do it. There's two ways you can potentially do it. I'm going to show you the harder way first, and then I'll show you the easier way after that. So we're just going to get underway. Again, I'm going to run through this trial balance very, very quickly in terms of the item identification because we've already done that in previous videos and we should be well versed in that by now. So I'm just going to let this one take over the screen for now and we will get into it away. Okay, so again, accounts receivable is a current asset, sales returns when not is a negative income. Okay, bank is a current asset, car at cost is a non-current asset, but we're going to also label that PPE, delivery van PPE and non-current asset again. Freight inwards, again into the business, is going to be a cost of goods sold. Okay, drawings is going to be a owner's equity. Delivery van and petrol is going to be an expense to the business. Rent on this side is an expense, interest is an expense on this side. Inventory, opening inventory is just a cost of goods sold. Land is going to be a non-current asset and a PPE. Premises, non-current asset and PPE. Okay, purchase is an expense or a COGS to be more precise. Rates is going to be an expense. Wages is an expense. Telephone expenses. Carriage inwards is also a COGS. Okay, two types of inwards COGS there. And salary is an expense. Moving on to the other side as accounts payable is a current liability, capital is owner's equity, commission again is an income, discount received is an income, non-current liability is mortgage, purchase returns is a negative expense, sales is an income, and short-term loan is a current asset. Don't forget your closing inventory is also a current asset down the bottom there. Okay, so we are going to get started on the actual doing of this problem. And this is Smithy's Snazzy Shoes balance sheet as at. And again, I'm going to draw you to that difference between the income statement and a balance sheet. We use the words as at rather than for your ending. There's two ways to do this. Again, it doesn't matter whether you put current assets up first or current liabilities. Current assets or non-current assets up first. As you've seen in most of my videos, I like to start with non-current assets, okay? But you can start with current assets. It does not matter either way, and you will get the same mark. So, as you can see in the question up this top left-hand side here, it does actually make us say we have to use the note section for PBE. Okay, so this is where some people didn't read the question properly. Some people decided not to use a note section. I don't know why, especially when it's there and given to you. Okay, so we're just going to be pedantic and underline non-current assets because if you've got used to these videos, we're a bit of perfectionists here. So we're going to start with that note and get that out of the way so it's just easy, quite and simple. And as you can see down the bottom, I've written note property, plant and equipment. Okay, so what we can do is put note 1 up here and we're going to use property, plant and EQ, and I'm just going to abbreviate that because for this video normally I'd write smaller than this, but for this video, so for you to be able to see it, I need to write a bit bigger. So what we're going to do is we're going to go down our left hand side of our trial balance and we're going to look at all those totals that we've written PPE for. So that is why we item identifies, because then it makes this so easy. Okay, so what we can go is car. Our car is worth 25,000. Okay, our van, again, I'm abbreviating, please don't do that in the actual exam. Please fully label everything. That is the same as the 160,000 as the actual problem, and the last one there is premises. Premises, oh sorry, I spelled that wrong. premises, there we go, 511000. And then we total that all up and we will get a total of 708. Okay, and that just goes straight into this far right hand column. And as you can see on this side, we've just now crossed out all our non-current assets, so there is nothing left to do in that section of work. We can do that straight away. So next bit we're going to look at is current assets. Okay, and there's a few that people forget here, so we're just going to be really careful. I always like to start, if I'm doing my current assets, with my closing inventory, and the reason for that, okay, is the problem we see mostly in this level of accounting is people forgetting closing inventory. Okay, closing inventory should be the first one straight away. We see it down the bottom, we circle it like we have down here, making sure we don't forget it. So we put that in first. We're going to make that really, okay, really important there, and put that in as $100,000. Okay, it's kind of breaking my rule of my alphabetical order, but that is okay in this instance because, again, way too many people forget it, so I'd rather you have it than not have it. Okay, and then we're just putting in our other current assets that we can see throughout this. Okay, and again we can cross those two off, so bank and accounts receivable, so they're dealt with. Okay, total that. Okay, chuck that into the final column, which is going to be nice and easy at 306. Okay, again we can just total that and we can get our total assets for the date that we are setting at, which is going to be 1,014,000. Okay, and that will be our total assets. Okay, if you want to, some people do it, some people don't, call this current assets. Okay, and total current assets. Some people do it, some people don't. Doesn't really matter, not particularly, but I just will, just for the sake of doing it today. Okay, then we're going to look at our current liabilities. Again, doesn't really matter if you put current or non-current liabilities first. Some people say non-current should come first, some people say current should come first. Ultimately, if you do both of them and you do them correctly, it doesn't actually matter to the outcome, and some people will hate me saying that, but that's okay. So our total is 39,500 there, okay, and our accounts payable can drop below that, which is 228,000. Again, what I'm just going to do is, to keep this nice and simple for this question, we're just going to cross out our two, sorry, that should be label current liability. So we can total those, chuck that in that third column there, sorry, the second column there, and that's going to total at 367,500. Okay, and then our non-current liabilities. Okay, non-current liabilities is just our mortgage, and that is going to be 517,000, and then I'm going to write total liabilities. Total liabilities, and we're just going to chuck that straight into that far column, which is going to be 884,500, which, if we do our maths there, is going to be our net assets figure. Okay, our net assets figure is going to be 129,500. Okay, and that's our net assets. Okay, so this is where it gets a bit tricky, and a lot of people struggled in the actual exam, and I'm going to teach you two ways now to be able to do it. The first way is I like to call cheat code, and if you're running out of time, this is the easiest way to do it, but if you've got time, I would recommend the full incorrect way to do it. Okay, so our owner's equity section. Okay, so um, and so I'm going to use one more line than's needed in this thing, just because I've left a couple of spaces where I probably shouldn't have earlier on. But opening capital, again, start off like always. Opening capital comes to 112,000. Typically, then we plus our net profit. Okay, so I'm going to leave that blank currently. Okay, because there's two ways to do this. The net profit isn't given to us in this question, and it makes it a lot more difficult than normally. So net profit is there. Okay, then what we do is we list our drawings. Okay, and that typically comes in. Oh, sorry, I've put that in the wrong place. I'll just move that over slightly. Okay, so 112,000. Okay, then over here we're going to minus off our drawings, which is 25,000 in this question, and that will give us our closing capital. And this is where I say there's a bit of a cheat code here, and whatever you want to call it. What we do know is that this figure here must equal this figure here because it's a balance sheet, right? So what I can do is, if I'm 100% sure that 129,500 is correct, we can go like this. Okay, 129,500. Okay, then what I'm going to do is reverse this. So instead of minusing off 25,000, I can add 25,000 to it. Okay, so if we look at this, we go 129,500 plus 25,000. Okay, 154. So this figure in here must be 154,500. Okay, so what we can do then is now work out what capital is by minusing off our opening capital, which gives us 42,500. Okay, because we've just worked backwards to work out our missing figure. Okay, and I'll show you the maths down below for that. So we take our 19500. Okay, we plus our 25,000, which gives us our 154,500. Okay, then from that total there, we're going to minus off our 112,000, which gives us our 42,500. Okay, and again, only use that method there if you are 100% sure that your net assets is right. If you're a bit worrying about your net assets, what we can do is do it the old-fashioned way. Okay, what we're going to do is add up basically what's left on the right minus what's left on the left. Okay, the only tricky thing is closing inventory will come into this, and that's kind of our red herring here. So you can do a mini income statement balance sheet, and you can add all the things on the left and the right. Okay, so if we do that, we can take our sales, for instance, we can take our discount received, we can add our commission in there. Okay, all those three, okay, are going to be our incomes. Okay, but we can also treat this minus expense as an income as well. Okay, so we can add all those three up, which is going to come to 420,000 plus 2,000 plus 4,000 plus 18,000 equals 440, I believe, off the top of my head. 420 plus 2 plus 4 plus 18 equals 444. Perfect. Okay, so then we can minus off what's left. So these are basically our incomes, and we're going to minus off our expenses. Okay, and our expenses equal everything that is on the left. So we're going to go 2,000 plus our freight inwards, that's in there, our delivery van, which is 3,600, plus our rent, which is 1,200, plus our interest, which is 39,000, plus our inventory, which is 50,000, plus our purchases, which is 315, okay, plus our 5,000 there for rates, plus our factory wages, plus our telephone expenses, plus our carriage inwards, plus our salary, okay, and we should get 501, okay, but as you can see, that that would currently give us a net loss, which can't be right, okay. It's because when you do this, you actually forget that you haven't minused off this current inventory. And remember, in the current cost of goods sold section of the income statement, it is basically treated as an income. So this actually needs to be plussed by 100,000. Okay, and what we will do, okay, is take our 540,000 minus our 501,500, and that equals, so if we add these two together now, it equals 42,500. Okay, and the cost of goods sold is where a lot of people failed in this question because they forgot that, the closing inventory is where most people forgot to add it back in at the end, because remember, it's actually taken away from our cost of goods sold section. Okay, again, that gives us the same total as we had over there, so we know this actually is correct. So our fail-safe did work in this case, and it's only because I kind of wrote the question, so I kind of knew what the answer was we were looking for anyway. But hopefully that helps in the balance sheet for the exam, and that is a recap on how to do a balance sheet with a missing figure.